Hi folks, Scott here, and this is the wrap for Wednesday, July 31st. So before I get into today's interesting Fed day and last trading day of the month action, I thought I would show you something a little bit more generic as it applies to the summer trading. I had a question about, actually by email from a member, about what's it like in August. And like most months, it just sort of depends, and it is market condition specific to a degree. But let me show you the results of fading gaps in August when above the 200-day moving average. So August gaps when above the 200-day moving average. And there you go. A slight bias for gapping down, and using an end-of-the-day stop, not something I recommend, but a good place to start your analysis. Slightly weak win rate and slightly weak profit factor. Nothing terrible here, because you got to remember, look at this number here, which makes the profit factor 0.85. Well, it's part of that is because it's got a monster losing trade. Get rid of that, it's pretty much a dead neutral strategy. So down gaps I'd call neutral. Up gaps clearly have a short bias, which is good. The largest winner was only a small percentage of the total net profit over the past 10 or 11 years. So overall, a clear short bias that's worth noting. Again, this is using an end-of-the-day stop. I'll rerun these numbers using our MTG stop parameters and share those with our members in tomorrow's wrap. Or you can check back here and watch tomorrow's wrap to see my pre-market comments that'll have our MTG stop parameters, just to see how tradable up gaps are. All right. Well, interesting day here. In fact, this is probably as good a chart as any to look at. These are the recent highs in the ES. Past 5 days of action been very sideways. A lot of narrow closes in the same range. Today was no different, but we did manage to break the 5-day highs, and that sort of convinced me to do not one but two trades that ended up being losers today that weren't really pure probability trades. So not the best day for me. But I trade when I don't have a clear edge. I trade with much smaller size. That's probably the one thing I do well, is I lose small most of the time. But let me take you through my thought process first on the gap. Today's gap worksheet, which is a summation of the 8 individual gap guides. And we end up opening pretty much flat excuse me, in the ES. And there was just nothing overly compelling. This above the highs wasn't bad, but when you looked at the individual guides, it actually didn't look that good. It was very choppy and mixed data, sort of neutral overall. Several unique day factors in play. Fed day and last trading day of the month. Fed day tends to favor longs, not shorts. Last trading day of the month tends to favor shorts and not longs. So those were at odds with one another. And then in terms of unique patterns, same thing. Up gap after false down day, historically a dog of a trade. And hammer candlestick slightly positive. So a lot of cross currents here. Last night's video wrap also favored an up gap last trade day of the month with a 2 p.m. time stop to avoid Fed day announcement. So here's how I summed it up, and I think I said it pretty well. You got mixed data for the guides and the worksheet. Two strong influences of the day: FOMC announcement, which is normally bullish, and last trade day of the month, which is normally bearish in terms of by the end of the day. And we had big closing variance yesterday too, so it resulted in gaps in mixed opening directions. So with all this cross currents, no trade for me. And I will trade very cautiously today. That's a huge hint. I don't say stuff like that very often, but today was just an unusual day. Fed day and last trade day of the month. Shake it all up and close your eyes, and no telling what you'll end up with. So that was my belief. Whoops. Let me show you the 5-minute action. Gap up just barely above yesterday's close. Filled the gap, and then off to the races to the upside. Let's see. Russell opened just above yesterday's highs. Rallied some first. See NASDAQ up, and the Dow was down a little bit. The ETFs, see, they were all up considerably because of that closing variance. That's what I meant by the closing variance. Closing variance, because the futures rallied yesterday pretty strongly those last few minutes. So good decision to not trade the gap. You would have been stopped out had you traded these ETFs. 15-minute range guides came out, and they were just mixed. No edge there. First hour guides came out. They had a slight edge for going long today. A slight edge. Not strong enough for me to normally trade them. But it was basically half of them were favorable, the other half were basically neutral. But since it was Fed Day, and my advanced studies showed that high breakouts are generally good on Fed Day, I decided that if we broke through yesterday's highs in the ES by at least 2 points, it went to at least 90.5, then I would consider buying a pullback. That didn't happen though until the first hour range guides came out, and it sort of powered through. First hour range guides, as I just mentioned, basically did favor the high breakout somewhat. So I set up a buy order to buy a pullback at 88.75. I think that was the number. Yep. No, it was 89 even. 2 ticks above yesterday's highs. In the ES, greatly reduced position size. The reason it was greatly reduced, and I decided I would take the Russell straight up on the high breakout, which ended up basically buffaloed me, taking me out at the high of the day and getting stopped out because advanced studies looked good and the first hour range guides, both of them favored the Russell. So tiny position, or as small as I'll do on the range trade, is quarter size, but it still hurt because both of them was stopped out ahead of the Fed announcement on some weakness. Now, the reasons they didn't work, in fact, I wrote them down. There were quite a few, and I mentioned these in the trading room and tried to, again, I gave a fair amount of weight and basically, honestly, talked myself into taking the high breakout. But we had price action confirmation in the ES, which I thought was a big positive. So the reason it didn't work is range guides weren't overly strong. I wouldn't normally take them. The internals were weak as well. If you go back and check AD ratio, it was like 1 to 1.2. Pretty weak today when it was breaking out. Last trade day of the month has a bearish bias, as I mentioned. And I'll be getting one other. Doesn't matter. There were several factors in play. I took a chance and got stopped out. Not a big deal. Didn't do any other trades ahead of Fed announcement. After Fed announcement, I wasn't going to trade, but after watching, I didn't watch closely, but I noticed the action was pretty choppy, and we were trading near the lows around 2:30. I went ahead and set up a discretionary trade for a possible end-of-day trade because I had a data point that I showed in the trading room today that showed that Fed Day and last trading day of the month tend to trade in the direction of where their prices are trading relative to the open after 3 o'clock. Meaning if you're up above the open after 3 o'clock, they tend to trade in that direction. If you're below the open after 3 o'clock, they tend to sell off. I decided to set up a break if we got near the highs. Had a busy afternoon, would not be watching the markets closely. I decided to discretionary trade it. I think it was 1993, and to scale up, got a little bit greedy, +4, and I think I had like a 10-point target the next stop. Thinking we could have a stop run, right? We're up here near the highs. If we get up here and start breaking and try to run to 1700, Fed Day, could be a catalyst to do that. So, right idea. What I didn't expect to happen was when I set this up, price was down here below the close. I did not expect nearly a 10 point plus rally in a matter of 30 minutes and to get triggered. I didn't even know I'd been triggered. In fact, when I found out I was triggered, I'd also found out I'd been stopped out. So disappointing in that regard. As it turned out, the markets did not conform to history. They sold off into the close, and it all gets back down to what I said right here. I will not trade the open and will trade very cautiously today. So even though I had 2 losers, they were small losers. I continued my overall net streak of losing money after Fed Day announcement. I've been trading Fed Days for 10 years, and in aggregate, I have not done well. And yeah, I've heard all the rules and all the tips and techniques about you take the third move and blah, blah, blah. And let's see, third move would have been what today? 1 up, 2 down, third up, anywhere in there. Well, I guess I took the third day. I didn't think about it this way, but I guess I took the third move at the top. Anyhow, it's just a tough day to trade, and it's not a good day for probability traders. So, unfortunately, even though I've been trading a while, I was reminded again of the importance of sticking with the hardcore probabilities and waiting for the best setups. That's normally the best advice. So, hopefully some of you who did not lose money today or did not trade today can hopefully learn something through the mistakes of others. That's one of my goals of this daily video. anyhow, that was my day. We got good movement here. Market is definitely poised to move. We'll see what comes tomorrow. Tomorrow's first trading day of the month tends to be riskier for up gaps. You might want to keep that in mind. And let's see, post Fed day. I don't remember off the top of my head, but that'll be in our worksheet. And I'll do all kinds of other great analysis prior to the open and make my decision then. But have a great one. And there you go. That is the wrap for the last day of July, Wednesday, July 31st. Have a good one.